if you look at American or European farming, about 3% of the working population are farmers. In Kenya at the moment and in India at the moment, massively more, much. You would expect over a period of time the emergence of more professional, more commercial farmers. Do you have any strategy for identifying those as your longer-term clients?
Absolutely. I mean, you have 30% on an average of farmers who are very progressive.
Yeah.
They may be small, they may be large. The 30% that are sitting on the fence who could go either way, and the 30% right at the bottom. So you start with the progressive guys. Generally, you would find them in supply chains, in progressive markets.
Yeah.
Years of intermediation have created a distance between the farmer and the consumer. So the quiet revolution you spoke about on mobile phones, the farmers are finding that they are pretty much distanced from the consumers, and they want to get a feel of know-how of what the consumer really wants as a product. Today they don't have that, and a lot of the progressive farmers are starting to look towards getting an insight into what the consumers really need.
Yeah.
And bypass some of these because the traders buy everything by weight, and the consumers want a certain quality and a certain kind of touch and feel to each product. And specifically in high value crops like vegetables, milk, this is quite a revolution taking place.
Okay, so you've identified that there are these 30% which are really moving forward. Then you've got the other 30% that could go either way.
Yes.
Do you have any strategy around those?
Well, the approach is when you cluster the farmers, you would end up, we do end up looking at it village by village. So within the village, there is a general tendency to follow. So the progressive farmers, they tend to get better credit terms and things like that. So the others then would naturally try and come up the curve to get better credit terms, better facilities, which these guys enjoy. It's early on the learning curve, but that's the approach that we would take to a carrot and stick approach to bring them into this side. Not necessarily a training and giving them professional advice and all that. That would come from the supply chain captain.
Right.
But our approach would be carrot and stick, credit terms, volume of funding. These are the kind of things that a progressive farmer would get. So the idea is to be able to distinguish between a progressive farmer and a not so progressive farmer.
Right. And then if you look at, I think that you have a number of new products and things that you've developed and developing over time. Which are the ones that you in 4 or 5 years' time expecting to see as being your specialized areas?
We, 4 or 5 years' time, our specialized area would be pretty much on the lines of what Ross mentioned. We're already working with the likes of Unilever, Nestle on their supply chains and helping them with sustainability, traceability issues that they have. So we're very much entrenched. The agri-loans that are getting generated by our supply chains right now, maybe 10% of our overall loans on a month-on-month basis. We see that going up way past 50, 60, 70% and becoming a major part of our agri-lending business, and maybe even 100% 5, 6 years down the line. So our whole agri-lending servicing model is going to be based on supply chains, and within those supply chains there will be villages where we will dominate banking in those villages. So there's a twin approach that we have.
I'm going to switch in a moment to you to ask questions, so please prepare your questions. We've got about another 15 minutes. But I wanted to just expand something that we talked about last night. One of the reasons why we have these conferences is that you learn little things from other people, and sometimes something that somebody else will say will add what you've been saying on 1 and 1 makes 3. You made an interesting comment about the Uganda conference and something that you learned from the Uganda conference which was new to you and you think might be relevant to India. Would you like to expand that a bit?
Yes, the warehousing piece that we saw on the field visit, where the farmers come in, the goods are unloaded and it goes straight into a sorting machine. The goods are sieved, they're rebagged, graded, rebagged, and the foreign particles are given back to the farmer as a process, and the bags are housed on a commingled basis.
Right.
That is something that we don't have in India, and we're trying to ask warehouse owners to get into that mode, and we see a lot of the new facilities, warehousing facilities, putting up these grading sorting units outside the warehouses, and it does help with quality checks on the produce and also reducing the cost of warehousing.
The other one was that you mentioned something about title and non-title loaning.
Yes.
Expand that one a bit.
Well, in India, we have, by and large, farmers have land titles. So when you want to do work with a farmer over a long-term basis, you mortgage his land, and that kinds of locks him into commitment with the bank, and then he looks at the bank for all his long-term, short-term needs. We don't have anything other than that to lock a farmer in. So if we have to look at a large number of farmers in India who don't have land titles, and today we don't work with them. So we look at models that were there in Uganda, Kenya, using geotagging to get a better grip, a better lock-in to a farmer for a longer period of time, and to reduce your monitoring costs. So those are models that we want to build in. Typical to our bank, we start with the large farmers and start coming down. So we are somewhere in the middle right now. We started on the top. And as we come down further, we will be developing these using models from Africa to work with the small and marginalized farmers who do not have land titles.
Great. Okay. Interesting.